Hi there, I'm Paul Bagnall. Welcome to today's edition of Market Call on BNN Bloomberg. Kim Bolton's on the show today as our guest. He is portfolio manager and president at Black Swan Dexteritas, and of course an expert in tech stocks. And he'll take your questions on tech stocks through the course of this program. So please do give us a call toll free at our number 1-855-326-6266. You can also send us an email at marketcall@bnmbloomberg.ca. We'll get to your questions with Kim Bolton in the second segment of our show. And this is the first segment of our show. We'll welcome Kim to the program. Thank you, Kim, for coming by as always.
Thanks a lot, Paul.
And you say in some recent notes that in markets like these, you and your colleagues often trim those securities that are achieving their respective intrinsic values, or going to where you had hoped they would.
Well, it's been a good run. Well, it was a good sprint into the end of the year, and then first couple of months of the year were great for us. March has been sort of more of like a consolidation. Sometimes it looked like a bit of a sell-off, but I think you can just sort of treat it as a consolidation, and then hopefully into the second quarter we're off to the races.
I think we have an issue with your microphone. We're going to fix that. In the meantime, here again is the contact information to reach us at 1-855-326-6266. The email address is marketcall@bnmbloomberg.ca. We're also going to take a look at the NASDAQ Composite Index. It, of course, is the key bellwether for the technology sector. And this is the backdrop that Kim has been talking about. There's the NASDAQ 100. It has the 100 largest companies within the NASDAQ Composite. There's a significant overlay between the two. And you can see the NASDAQ Composite trading not at an absolute record high, but certainly in record high territory. Kim, let's begin again. You said in some notes that in markets like these, and we're looking graphically at what the tech market looks like right now, a big part of your job at Black Swan Dexteritas on part of clients is trimming some positions that have posted gains for clients.
Yeah. So we have price targets on everything that we have in the funds and in the separately managed accounts. Normally, when it gets within sort of 5-6% of price target, we take a third off. Once it gets to the price target, we take another third, and then evaluate. Maybe we're going to have to change the price target, but not that often. So it works so well for us, and it's always good to bank some profits.
How much of a tailwind has been the macro environment with so much focus on the U.S. Fed and the expectation that rates will come down? The Fed, of course, due to speak later today.
Yeah. Very much so, except during the earnings season. But once the earnings season is over, it goes from the micro into the macro. And so, that's what everyone talks about right now. But, we'll be going into another earnings season, in about 4 weeks' time. And then it'll go swing back into the micro. But I think everything is pretty well lined up. That it should be a pretty good second quarter. This has been great for us and good for the market that things just sort of consolidate in the month of March.
Viewers who have watched you before in this program will probably recall that you often use what you refer to as a hedging overlay to provide some downside risk. How much is that a part of your toolbox right now?
Well, our stock picking is pretty good. So we normally, like our neutral hedge, we'd be short the equity indices somewhere between 20 and 25%. If we hold on to that, our stock picking still sort of together with the hedge, we outperform the markets. Right now, though, you can see it in the price targets that they're starting to, get up very, very close to our price targets. So we've raised the hedge a little bit, and we're up to about a 45% short equity index overlay on top of the stock portfolios against the notional amount of the stock portfolios. Beginning of the year, if you recall, Paul, it was the first two and a half weeks in January. We actually had the hedge, and it was the right thing to do. We had the hedge all the way up to 75-80%. And you can recall the beginning of the year, everyone thought, after the great 2023, that there was going to be a bit of a sell-off, and it sort of worked. But then we trimmed that back, and we've sort of held it under 50% since the middle of January. Yeah.
That's how Kim Bolton sees these markets. We'll be back with Kim right after this. He's portfolio manager and president at Black Swan Dexteritas. He'll begin taking your questions on technology stocks right after this. So give us a call or fire us an email. Welcome back. Let's start the questions coming to Kim Bolton. Marco has written us an email. He is questioner number 1 today. Constellation Software is his topic. CSU on the TSX. Kim, would you go for Constellation Software or its junior Topicus?
Good question. And there's probably another one that you could throw into the mix there, which would be Lumen, which is the other spin-off from Constellation. So, thank you very much for your question. I think I'd prefer to go with Constellation over versus Topicus, but I'd also suggest maybe you look at Lumen. Lumen is the spin-off that happened, I don't know, second quarter of 2020. And that was the Volaris business unit of Constellation, and it's done tremendously well. The Volaris, it focused on. So just to back up, Constellation very different from the likes of like a Microsoft, because in Microsoft they have a software that sort of goes horizontally across a whole bunch of industries. Mm-hmm. Constellation is more into the verticals, so they pick a particular segment or business out there, like agriculture or financial services or education or something. And for example, that's exactly what Volaris or Lumen was all about. It was a vertical a software business that catered to agribusiness, financial services, and education, versus Topicus, which was the other spin-off, that is actually out of Europe, is more sort of on the engineering side. And so, but I would still go, and only because we've been involved in Constellation Software as an investment for the better part of 6-7 years. And it's just been very, very steady. Even when the market gets into sell-off mode, Constellation still does extremely well. Constellation has done 260 acquires since 1995 when they started up. They have now a total of 5 operating segments. They have that Volaris that turned into Lumen. They got Harris Computer Systems, Jonas, and Vila, and Persis. So I would stick with Constellation.
Okay. Let's go to the phones for the first time in this program. Ray is on the line from Moncton, New Brunswick. Hi, Ray.
Hi. Kim. A question for you. So I purchased Shopify in May of 2017, and at one point in my TFSA, so I've got about 3,100 shares. And at one point, it was worth quite a bit when it was up about 2,100%. Right now, it's close to 800% return. I'm just wondering, should I stick with it, hoping that it goes back up to that, or should I take some of my gains and buy something else in the tech sector? Thank you, and I'll wait for your answer.
Thanks, Ray. That was a lot there. So Shopify. We just started actually last week. We were trimming a little bit of it. So currently, right now, I think it's trading around 77, 78. We have a 12-month price target of 82, so it's banging up close to that price target. That's why we've trimmed it a little bit. But we're still holding on to about, well, in the fund, it'd be about 3.5%. And actually, I was just referring to the prices on the NASDAQ, and you have the TSX up here.
Okay, we can get
So the 82 price target would be closer to...
Here we go.
Oh, there we are. Yeah. So currently just trading 78.5. So yeah, and our price target is 82. You know, they've done tremendously well in the. They reported back on the 13th of February. Fantastic report. They've beaten the top. They've beaten the bottom, and they actually kept to the guidance, which a lot of the e-commerce companies didn't. And then, you know, their operating margin is still extremely strong. And now they're starting to bring in, as a lot of the folks are in the e-commerce, bringing in generative AI tools in there. So I guess, Ray, I would stick with Shopify. Might take a little bit of profit off here. I'd get back into Shopify if it gets down towards sort of that 73.5 and then maybe just under 70. On the e-commerce side, I think Amazon actually has a little bit longer runway here. So sort of the same sort of business in there. Yeah, that's what I'd recommend, Ray.
Okay, thanks, Ray, for your question on Shopify. Let's go to Elliot. Elliot's in Edmonton, Alberta. Hi, Elliot.
Good afternoon, gentlemen. Moving up smartly after its most recent quarter, where do you see Salesforce going from here? Thank you.
Thanks, Elliot. So let's see. So currently, Salesforce is trading just around, yeah, 30, just shy of 302. We actually have a 12-month price target on this of 318. So you'll probably hear this over the course of the program because the market has been relatively strong. But I think as we go through this consolidation stage in here, you know, another one that I would look at in that sort of space, oh, it's on the tip of my tongue, trying to remember. Oh, I forget. Anyway, but I'd stick with the Salesforce. You know, it's the poster child when it comes to the customer relationship management side. And it's the one everyone seems to chase out there. Yeah.
Okay, thanks, Elliot, for your question on Salesforce. We'll be back with Kim Bolton right after this. He's president and portfolio manager at Black Swan Dexteritas. He'll be taking your questions on tech stocks right after this. Okay, let's keep the questions coming to Kim Bolton. Mike is in Windsor, Ontario. Hi, Mike.
Yes, good afternoon. Mr. Bolton, pardon the pun, but what is your synopsis on Synopsys Incorporated? Thank you.
Thanks a lot, Mike. Actually, I think we had this as a top pick back, it was either in November and December, and it was, we sort of got lucky on that, and we picked it up sort of down just shy of around 460, 470. So Synopsys, so they provide electronic design software to design into integrated circuits, and it offers this this software product called Fusion Design Platform, and really they are, as Jensen Huang mentioned in his address back on, I guess it was on Monday evening when he did that NVIDIA conference, he actually mentioned Synopsys, how they were really going to be able to excel with that new Blackwell chip that they were coming out with. So Synopsys, they reported back on February the 21st. They just banged it out of the park. Expected to have earnings of 343. It was 356. They beat on the revenue side, and then they actually, unlike a lot of companies in that fourth quarter reporting back in sort of the beginning of February and going on into March, they actually raised guidance. So right now, Mike, we have a price target of 648. currently trading at 582. So it still has a decent runway left. But it's sort of gone up more recently. I think if you're looking to actually buy into it, you can probably see over the near term down closer to around 570 to 575, and then maybe down at around 5.25 if you get a bit of a retreat in the market. Thanks, Mike.
Okay, thank you, Mike from Windsor. Let's go to Don. Don's in Grand Prairie, Alberta. Hi, Don.
Good afternoon, gentlemen. My question is on BlackBerry with cybersecurity, and it seems like they have $210 million in cash, $224 million in debt, and they had a loss of approximately $500 million last year. Just your thoughts on the future of BlackBerry. Thanks.
Thanks for the call. We don't own it. We don't own it in any of the SMAs or in the funds, but we follow it. It's interesting because the average analyst out there has a 12-month price target, and this is just the average, of $9.70. And here it is sitting down at, just shy of 3.5. So they're, you don't find many runways like that out there. So can it go much lower? I'd almost sort of treat this as a bit of a lottery ticket. I wouldn't add to it if you own it. I'd hold on to it. I think you could probably see over the next 12 months, certainly north of $5. But it's just a tricky situation that they have themselves built into.
Okay, thanks for the call on BlackBerry from Don in Alberta. Let's go to Vancouver now. Peter's on the line. Hi, Peter.
Hi, thank you. Paul, the good horse. And there is Tim Borden, the tech guru. Tim, can I ask you about PLTR? The CEO appeared on CNN last week. He seems like an eccentric scientist. Thank you for your expert opinion.
Thanks, Peter from Vancouver.
Yeah, what's the name of? Did you interview
No,
Paul?
no, I can find his name
it's
now.
on the tip of my tongue. He was actually a classmate back in Peter Thiel's day, and so Peter Thiel is actually the
Alexander Cardamon?
yeah Cardamon. And so anyway, he's a academic scientist. But with a very, very quick business mind.
Alex Karp, I believe is the name. Alex Karp.
Yeah. And so he's turned into an excellent manager of people and of the business of Palantir, and actually a great spokesman for Palantir. One of our research analysts is actually in Uri, is in Silicon Valley. And he always talks about, and the reason that we have Uri in Silicon Valley is I talk to him every Friday afternoon after the market close, and he just talks about the movement of people. And if you can follow the movement of the smart people, you can usually figure out the smart companies out there. And so Palantir, when it comes to the generative AI, this is really sort of the mecca for AI in Silicon Valley. So that's where the smart people go. So they have two businesses out there. They have the Gotham, which is the government side, sort of sovereign side, and then the Foundry, which is the enterprise, private business, and so on. And it's really picked up, especially over on the Foundry side. When they first started out, it was very, very skewed to government work and sovereign work and so on. But they've really done a fantastic job on the Foundry free enterprise side. Now, as a result, it's a pretty fully priced stock. Currently trading right now about around $23.90. We have a 12-month price target of $24.10. So I'd actually recommend maybe trimming a little bit here. And I think it's a pretty volatile stock, so I think you can probably get it down closer to around 21.5, and then certainly add to it if it goes under 20.
Okay. That is Kim Bolton on the latest batch of questions, including Palantir Technologies. We'll take a quick break. When we come back, it'll be time to take a look at Kim Bolton's past picks right after this. Welcome back. Time now for past picks. Kim was with us on May the 1st of 2023, so not quite a year ago. One of the top picks on that day, Akami Technologies, AKAM, on the NASDAQ. And you can see that one has provided a 34% return and total return over that period of time. Kim.
So we've known Akamai for quite a while. So Akamai provides cloud services for securing and delivering and computing content on applications and software, and they're global. So, but one of the very, very cool things about Akamai, and where they are especially a leader, is into edge computing. So as workloads get, more sent out from data centers and cloud centers out closer toward users and devices and sources of data, this is where Akamai very much excels. So their software is on the edge, very close to these devices. And then, as you can imagine, as everyone else is bringing out AI products and services, back in February, they brought out this new initiative called Gecko, G-E-C-K-O, and it's Akamai's generalized edge compute. So it actually brings AI interpretation, looking for patterns, right out onto the edge. They've been pretty active when it comes to acquisitions out there. They reported back on the 13th of February. They're a bit shy on the revenues, but they kept to the guidance. The original guidance was to do just shy of $1 billion, and they say now in Q1 they're probably going to do a little more than $1 billion. So that's why it's remained strong in here. So our 12-month price target on Akamai is $128.25, and I think right now it's just sitting over 107. So it's still got a decent runway. If you can own it here, but certainly if you get it down closer to $100 or even down around 95, it'd be a great place to pick it up.
Okay. Number 2 on that day, IBM, a very familiar name. You can see the numbers here from May of last year to today, up 59% on a total return basis. Kim.
Paul, I never thought I'd ever see that. I remember when I first came on the program, I don't know, about 4 years ago, and I always used to say that I always liked playing IBM from the short side. Mm-hmm. But then, tunes changed. The tune changed very much when Ginny Rometty retired. She was sort of like remember Ballmer from Microsoft?
Yep.
When he retired and Adela came in, and he was the engineer, and then they got him into, less into the hardware, more into the software, certainly into the cloud. Likewise, when Rometty retired and they brought in
Arvind Krishna.
Krishna, yeah. And he spun off the Crindle, which was the hardware side, and then he was integral in the acquisition of Red Hat, which really got them into the cloud business. And so now they're a cloud business together with Watson, which was really one of the first when it came to AI. And so when all of that sort of came together, that's when we started to buy it, and we started to buy it down south of $150. But it's getting a little pricey. We have a 12-month price target here of $194.25. It's only a couple of dollars away. But I'd keep your eye on it. And I think you can probably pick it up sometime in the second quarter, down in the 180s. And certainly if you ever get it down in the 170s, it'd be a great place.
Okay. Finally, Texas Instruments was a top pick on that day. May the 1st of 2023. That one recommended at 167 or so, now trading at just above that. So the dividends help here. That provides a total return of 3%. Kim?
Well, we liked it until, I guess it was almost like the summer of last year, and then we actually started to lose it because, so Texas Instruments has two businesses. It has analog chips, which go into washing machines and refrigerators. They don't have sort of a memory. They're already programmed and everything. And then they have embedded processing, which is all about microcontrollers, and very much skewed toward electronic equipment and even over into electric vehicles. And so that's why we sort of liked it last year, but the shine sort of came off of the electric vehicle ecosystem, and so we sort of backed away. They reported back in January the 23rd of this year. They beat on the bottom line. They were a bit shy on the top line. And then they actually, what really hurt them was that they lowered their guidance because they're just not sort of in that AI space. Certainly in the semiconductor, but more in the analog versus the memory.
Those were Kim Bolton's past picks from May of last year. We'll be back with Kim after this. He's president and portfolio manager at Black Swan Dexteritas. He'll continue taking your questions on tech stocks after this. Welcome back. Let's return to your questions to Kim Bolton. He's here on Tech Stocks. Jonathan is in Toronto, and he's up next. Hi, Jonathan.
Hi. Thanks for taking my call. If you think those past picks are good, you should see the past picks Kim Bolton had from like 2022. What a champ. So my question is, if I can get your insight on NVIDIA versus AMD.
Jonathan, I think it's a great question because I was just chatting with Paul about it beforehand. NVIDIA and AMD, they're leaders when it comes to the chip and the packaging that they've done to actually build these super chips. It's not just the chips; it's actually how it's packaged, and that's what the two companies are especially good at, and especially Jensen Huang just came out with the Blackwell that is going to be the new chip coming out. But if you actually dig into it, a good portion of why it's a better chip and it's going to be so much powerful is because of the packaging. But Jonathan, you'll like this. One thing that NVIDIA and AMD have in common is that Jensen Huang and Dr. Lisa Su are cousins. So there must be something in the water there. So we actually sold the AMD, and we're looking at it because it recently had a rollover, and it looks a lot more attractive. But then we sold it back during the earnings season, and because the PE multiples just got nuts. However, NVIDIA is still fairly evenly priced. It's currently trading at around US dollars, sort of that sort of fluctuates between that sort of 870 to 890. Always looks like it wants to push toward the $1,000 mark, and we actually have a 12-month price target on NVIDIA of 970. But NVIDIA has now become really sort of a partner within that Magnificent Seven. So I think if you ever get a chance to get it, pick up NVIDIA south of 850, and certainly if it gets down toward 800, it would be a great spot. So I'm very much skewed toward the NVIDIA side versus AMD.
Okay, thanks, Jonathan, for your call. Amy is in Toronto, and Amy's up next. Hi, Amy.
Oh, hi, Kim. Good afternoon. I have questions on the cyber security ETF. One is called CIBR, and then the other one is CYBR. Actually, I own one of them. I just wonder whether I should take profit, but also rotating into just individual stock, or just hang on to them. I'll hang up and listen to your answer. Thank you very much for taking my call.
And Amy, what are those ticker symbols again? Just repeat them again. Go ahead.
CIBR, and the second one is CYYBR. One is First Trust, and the other one is Evolved.
Okay, thanks very much. Kim.
Thanks, Amy, for the question. I wanted to talk about it because I'm just not a big fan of ETFs in the first place, and certainly when it comes to cybersecurity. You know that because you really when you buy the ETF, you have to very carefully look at the weightings that you have within those, and many of them, you know, you're going to have overweight positions. And I think, you know, the cybersecurity ecosystem is so robust that you can actually buy underlying stocks rather than having someone else for a fee actually sort of build it for you. So, you know, it depends on, and on top of that, you know, you can, on the single stocks in the cybersecurity space, you can figure out yourself, or you can talk with us about, you know, entry points and also price targets, and when you can actually sort of bank that. So, you know, if you go back, I don't know, 2-3 years ago, maybe the ETF would be the place to go, but it is such a massive business right now that Amy, I'd really encourage you to sort of look at the underlying single stocks to get in there, you know, of the CrowdStrikes, and I'm going to be talking later about Palo Alto Networks, or, you know, into the Fortinet side. It's just a very, very robust ecosystem that you can actually pick your own stocks.
Okay, so stay tuned for the latter portion of the show. Palo Alto will be a top pick, and it's a big player in cybersecurity. Thanks, Amy, for a good question. Let's go to Stan. Stan's in Niagara. Hi, Stan. Can you hear me, Stan? Okay, I think we've lost our connection to Stan. His question, however, was on Taiwan Semiconductor.
Yeah. So this has to be very much a core holding. It's not in our top 5, but it's certainly in our top 10, and it's a very tradable stock. But but you have to sort of watch that whole ecosystem of the semiconductors. So Taiwan Semiconductor, as a lot of people know, this is the king of the foundries. They're agnostic. They don't actually do their own designs. Everyone comes to them. They have the cutting edge when it comes to equipment, with the litho equipment, and certainly the small nanos and so on. They control north of 50%. It's probably around 54, 55% of the manufacturing of semiconductors out there. But it is a tradable stock, and so I would actually encourage you, currently trading around 135, just a week and a half ago, it was up at almost 150. So it is a tradable stock, so and it should be a core holding in someone's portfolio.
Okay, thanks for the question on Taiwan Semi. Let's take a break, but we'll come back with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas and an expert in the tech sector. He'll continue taking your questions on tech stocks right after this. Okay, let's keep the questions coming to Kim Bolton. Lawrence is in London, Ontario. Hi, Lawrence.
Good afternoon, and thank you for your past suggestions.
I've done very well with Oracle and Microsoft. I'm thinking of buying one or the other of more of. Do you have an opinion, please?
Thanks, Lawrence. I think I'd more skew. That's a tough one, because they're both very fully priced. Microsoft currently sitting at 423. The average analyst out there has it sort of between sort of that 430 and 440. So it's but on any sort of a sell-off, certainly if you get it down toward 410 or anything, I'd pick it up. Likewise with Oracle, it's actually through our price target. We like it so much, though. We've been selling calls against. So our 12-month price target for Oracle was 126, and here it is at 120, almost 127. So I really didn't want to lose it because they just seem to be running on all cylinders here on both the cloud, both of them very much involved in the cloud, of course, and also on the software. So if you own it out there, either of these, I'd write some calls, but if it rolls over at all, 5%, I'd look to pick both of them up.
Okay.
Thanks, Lawrence.
Thanks for the question, Lawrence. Let's go to Winnipeg. John's on the line. Hi, John.
Hello. I'd like Kim's comments on Snowflake and its recent drop to the October lows. Seems very oversold, and I wait for your reply. Thank you very much.
Thanks, John. Yeah, we own it. We own it in the funds, in the Cayman and also in the Canadian fund. And we have it sort of scattered in a few of our separately managed accounts. When they reported back on the 28th of February, it was a shame because on the earnings, they came in at 35 cents. And it was expected at 17 cents. And you go, well, hurrah. And then even on the revenues, they came in at 775 million and expected was 760. And so actually the day on the 28th when they reported like that, everyone sort of jumped in and started buying it. And then they had the conference call and they guided it down from 3.5 billion in fiscal 24 down to 3.25 billion in revenue. Now, mind you, the margin still sort of hung in there. So I agree with you, John. It's a good place, and there are not many companies out there that you can actually find a runway like this. Currently sitting at around $158. And we still have, and a lot of the analysts have, 12-month price targets up sort of between that 220 to 230. We have ours at 232.
Okay, Mary is in Vancouver. Hi, Mary. Thanks for waiting on our line.
Thank you for taking my call. I just want to find out, if cybersecurity, I want to get something in cybersecurity. Is it good to go into with CrowdStrike Holdings or Palo Alto? And because Palo Alto seems to be coming down quite a bit, and whereas CrowdStrike is still holding tight where it is, kind of.
Thanks, Mary. We like both of them. I'm going to be talking about Palo Alto on the top picks. But let me just sort of talk about CrowdStrike. It's got a decent runway in front of it. It's currently sitting at around just shy of 322. We have a 12-month price target of 181. They moved to that subscription-based model earlier than a lot of the cybersecurity guys. They're very much involved in the corporate workload security side into the cloud. They have this Falcon platform, identity protection, log management. They reported back on March 5th They really blew it out of the park on the top and the bottom, and they actually guided higher, both on the revenues and on the earnings. So you could pick it up. You should own it here. If you can get it down closer to 300, it'd be even better. And then if it ever goes under 300, it'd be a great buy.
Okay. Thanks to everybody who put a question to Kim Bolton. That's all the time we have for questions. But after this, Kim Bolton will share his top picks right after this break. Okay, it's time now for top picks from Kim Bolton. Number one today, Intuit, INTU on the NASDAQ. Kim.
It was tough, as we've been talking about during the program. You know, the markets are, I wouldn't say frothy, but they're sort of lofty right now. So it was hard to actually find some that had a decent runway. However, Intuit, and everyone will probably know some of the products that they use over at Intuit. So they have like the TurboTax. They also have the Verified Pro. They have the QuickBooks out there. So it's sort of interesting for this time of the season. So currently trading right around 630, and the 12-month price target is 717, so it does have a bit of a runway left in it. They reported back on the 22nd of February. They beat on the top and the bottom, and they actually raised the guidance. However, you know, here we are going into tax season, and this is where Intuit really makes their hay.
Okay, Intuit number one today. Workday is number two. These aren't ranked in any particular order. They're just Kim's top picks on this day. Workday, ticker symbol WDAY on the NASDAQ. Kim.
Well, this is sort of the modern day of software company in the cloud that is in project management. So it offers this suite of financial management applications that are very much sort of skewed toward two sides of it, sort of the accounting side, but also into HR, or what they call human capital management. It's interesting because the Magnificent Seven all have Workday on that HCM, human capital management, as a software in there. So they're just best of class when it comes to human resources. And as you can imagine, when it comes to both the accounting and also the HR side, they're bringing out fast and furious generative, sort of predictive AI add-ons, both on the HR and also on the financial planning, and very much on the automation of sort of routine tasks. But the AI side actually helps on both of those, the accounting and the HR side, on improving the decision making, because you're actually borrowing from data banks where people have tested different sort of ideas out there, and it gives insights and recommendations to decision makers, both on the accounting and also on the HR side.
Okay, and as promised a couple times in the program, as we talked about cybersecurity along the way, Palo Alto Networks, PANW on the NASDAQ.
Yeah. So one of the previous callers actually mentioned that it hadn't sort of kept up with the others. You know, they don't have a big, you don't see them as much advertised out there, but Palo Alto, I always look at as being sort of the one that caters more so than like a CrowdStrike or Fortinet to sort of small and medium-sized businesses. So they offer firewall appliances and software, like a lot of them do out there. But they're one of the ones that have been around the longest. They're generating and developing next generation security solutions. They're probably their their nearest competitors would be CrowdStrike that we talked about before, and also Zscaler. But they are a little bit more international. So last year on this AI side, they brought out this Prisma Cloud Darwin, which is really bringing AI to the cloud in cybersecurities. And then they've also teamed up with a lot of large language model suppliers out there. They reported back on the 20th of February.
Yeah, that's what I wanted to get to. We have 60 seconds left. If we can just go back to a one-year view of the stock, what happened on that day? I'm seeing that the company reduced its guidance on that day.
Yep,
I know
yep.
there were several analyst downgrades on that day. That's that big jag down in late February.
Yeah. So on the reporting for the fourth quarter, they beat on the top and they beat on the bottom. And then they came out in the conference call, like a lot of them did. And they guided their earnings and their revenues down. So their earnings, they edged them down, expected in the first quarter to be $1.30, and they said it's going to be closer to $1.25. The revenues, they said there was going to be about $205, and they guided it down just short of $2 billion. However, they're a very, very conservative company. It's sort of similar to Fortinet is a very, very conservative company. So that's why I'd encourage you, and that's why we're buying it, is because the move down has already been built into the market. And if they were going to actually miss it, they would have reported.
Kim Bolton, on behalf of our viewers, thanks a great deal once more for being on Market Call. That's it for us on Market Call. As always, please consult a qualified financial advisor before making your investment decisions. Thanks a lot for watching. We'll see you tomorrow right here on Market Call.